Well, good morning, and welcome to the Hotel Leaders Outlook panel these days. But first, I'd like to get a feel for where each of you are focusing your company's strategy. And what is your top 1 or 2 strategic priorities? And Monty, why don't we start with you?
Sure. Our platform, Ashford Hospitality Trust, is dedicated to investing in the hospitality industry. And what we try to do is to adjust that strategy as the times change. Over the past number of years, we thought the best place to deploy our capital is in investing in direct hotel ownership, which we've done. But since our big acquisition of the C&L Hotels and Resorts last year, we think that the best opportunities for us is in some other areas. And we've started to shift our strategy to invest relatively less in direct hotel investments and relatively more in some other areas. And we were formulating that strategy last year when the debt market crisis occurred and valuations on Wall Street fell dramatically, and that created a couple of opportunities for us to pursue. We were already pursuing value add in our existing portfolio, which we'll continue to do. And we are going to start and have started pursuing some of our mezz lending, which before was only about 2% of our platform, and to grow that to a greater percentage of our platform. And also we see some opportunity to buy back our own stock, which is very creative for us right now. So the basic strategy is to not buy more direct hotel investments, to take our hotels we own, and over time, gradually, it's not a sudden process, but to net it down over time, and as we net it down, to use those proceeds to pay down our debt, to lower our debt ratios a bit, to buy back our own stock, to do some mezz lending, and then also to invest in our existing assets.
Very simple. These are challenging times, volatile times, uncertain, and we're probably facing quite a choppy year. For us, it's very simple. We have a great portfolio, we have great plans in place. For us, it's just execution, 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 mixed with a healthy blend of opportunism, and get through this year and let the supply and demand cycle get in favor of our valuations, which are sitting there lurking. So get it right this year, nothing flashy, and keep going.
This is a great time, actually, because there's a lot of there are a lot of interesting growth opportunities that are before us. We have a very robust pipeline in a lot of different places. So my focus is really on making sure that we're positioned for what we need to execute on in the coming several years. So yes, while current business conditions in the States are somewhat uncertain, we're really focused on, first and foremost, developing people in the organization. We have a very significant number of people we're going to need to hire over the next few years to staff a lot of hotels opening principally in China and India. So people is by far the number one priority, and ultimately we really, our core focus is to be the employer of choice everywhere we're operating.
So I look at the strategy this year and in the next several years, it really is going to be very heavily focused on our international growth to take full advantage of that. We have tremendous opportunities around the globe. As I say, it's very much in its infancy. We're very focused in Europe and really trying to exploit it with our limited service brands, and I'd say in Asia, really trying to exploit it with all of our brands. We've had obviously a tremendous amount of success in terms of our pipeline in the U.S. We've got the largest pipeline, I think, in the U.S., certainly more rooms than anybody else under construction around the globe. We have about 50,000 rooms under construction, a pipeline around the world of 130,000 rooms, but when you really look at that vis-a-vis our competition, it's been very very U.S.-centric, meaning we've had a dominant pipeline in the U.S., but not as dominant a pipeline in Europe, Middle East, and Asia. And we think, obviously, with what's going on in those economies, particularly Middle East and Asia, and the growth there are astronomical growth opportunities for the business. So really,
Thank you, Adam. You know that heretofore, the 35,000 rooms that we operate have been at and in support of our theme park destinations around the world. And of course, it'd be silly to say that our strategy isn't, in first part, to continue to differentiate those, make them the place people want to stay when they come to our resorts, and we've been fairly successful at that. But interestingly, with the growth of and success of both the Disney Cruise Line and Disney Vacation Club, we've come to realize that the Disney brand has meaning even away from our theme parks, when people aren't right there at our theme park resorts around the world. And so the second half of our strategy is really to increase the footprint of Walt Disney Parks and Resorts, primarily in the lodging spaces, in other parts of the world that are not necessarily attached to our theme parks. There's lots and lots of interest in the Disney brand. There's lots of interest in Disney experiences. And over time, many people have come to realize that doesn't necessarily mean, riding attractions and going to a theme park, but it has to do with a quality of service, a family orientation, and everything else the Disney brand means to people.